I'm Wolfe, and in this short video, I'll walk you through a simple framework to estimate your business's fair market value, what we call a going concern valuation. When it comes to valuations, I like to use the acronym AIM, A-I-M. It stands for Asset Value, Income Approach, Market Approach. We'll focus mostly on the market approach, since it's the most relevant for small business owners. Let's briefly touch on all three. The first valuation method is the asset approach. This one is the most straightforward. You take the total value of the business's assets, subtract the liabilities, and whatever remains is the asset value. For example, if your business has $100,000 in assets and $20,000 in liabilities, your asset-based value would be $80,000. Now, that might sound okay, but this is usually the lowest valuation method. It's what we'd use if the business were closing its doors or liquidating assets, not if we're valuing it as a healthy, ongoing company. That's why we rarely rely on the asset approach for small business sales. The next one, the income approach, is the favorite of analysts, MBA programs, and financial theorists. It's based on calculating the future economic benefit of the business, forecasting revenue, estimating growth, adjusting for taxes and working capital, and then discounting everything back to today's value using a discount rate. It's powerful for large companies, but it's not practical for most small businesses. Frankly, it's overkill. So while it has academic value, it's not the method most buyers or brokers use in real-world small business transactions. That brings us to the market approach, the one that actually matters most for business owners like you. This approach looks at what similar businesses have sold for in the open market. We start by calculating your seller's discretionary earnings, SDE. That's your total profit plus your salary, plus any personal or one-time expenses we can add back. Then, we apply a market multiple based on real comparable sales. For example, if your SDE is $400,000 and the market multiple in your industry is around 3, that would suggest a fair market value near $1.2 million. It's that simple. So, if you remember one thing from this video, remember the AIM model: asset value, income approach, market approach. Each has its place, but for most small business owners, the market approach gives you the clearest, most realistic picture of what your business would sell for today. If you'd like to go deeper and see how your own numbers line up, you can use the link below to book a time with me. In just a few minutes, we'll walk through your financials together and help you get a clear, data-backed sense of your business's value.